Hey everyone, welcome back to Corporate Decoder, the place where we find out if companies are really healthy or just putting on a good show. Today we're diving into Caro Holdings Inc.'s latest report, and let's just say it looks like somebody decided it was time for a new accountant. Stick around to see why. This report from Caro Holdings Inc. is all about a pretty significant change happening behind the scenes, specifically who is counting the company's money. Before we jump in though, if you like getting clear, no-nonsense insights from these complex financial documents, make sure you hit that subscribe button. Also, we have a great community over on Discord where we break down these filings even further, so definitely check out the link in the description below. So what exactly is this document we're looking at? It's a Form 8K, which is basically like a special bulletin from a company to let everyone know about big news that's too important to wait for their regular quarterly or annual reports. Think of it as a company's urgent announcement system. And the big announcement today for Caro Holdings Inc. is a change in their certifying accountant. Basically, they've decided to switch the accounting firm that's been checking their books and giving them the all clear on their financial statements. The crucial date here is June 15, 2025. This is when Caro Holdings Inc., the company itself, made the decision that their current accounting firm would no longer be working with them. Let's talk about the company. Caro Holdings Inc. is incorporated in Nevada, and its main executive offices are located at 7 Castle Street in Sheffield, UK. Now, the main event, the company used to work with an accounting firm called Olejinko Oyebola and Co., or O and Co. for short. But on that key date, June 15, 2025, the board of directors decided to end their relationship with O and Co., effective immediately on the same day. So what happened before this split? According to the report, O & Co.'s earlier audits of Caro Holdings Inc.'s financial statements for the years ending March 31, 2024 and March 31, 24 and March 31, 23 didn't have any major red flags in terms of opinions. However, there's a significant piece of information here. Those reports did include an explanatory paragraph. This paragraph expresses substantial doubt about the company's ability to continue as a going concern. This is a really big deal. It means the accountants weren't entirely sure if the company would be around in the near future. They saw serious financial challenges that could make it hard for Caro Holdings to stay in business. The filing also states that during the recent years and up until the decision date, there were no big arguments or disagreements with O & Co. about accounting rules, the way they presented financial information, or how the audits were done. Also, there were no other concerning events that accountants are required to report. This part is interesting because it suggests the split might not have been driven by a major accounting dispute, but perhaps by the going concern issue itself or other strategic reasons. To make sure everything reported is accurate, Caro Holdings Inc. sent a copy of this report to O & Co. and asked them to confirm if they agree with everything stated here. This confirmation usually comes as a letter and it's attached as an exhibit to this filing so people can see if the former accountants have any objections. Now, who is the new accounting firm? On June 18, 2025, just a few days after parting ways with O & Co., Caro Holdings Inc. hired Bolladale Lolcal & Co., or BLC, as their new independent registered public accounting firm. They'll be the ones to audit and review the company's financial statements going forward. This new engagement with BLC is also noteworthy. The report states that neither Caro Holdings Inc. nor anyone acting on its behalf consulted with BLC before they were hired about any accounting principles or the type of audit opinion that might be given. Essentially, BLC didn't advise them on any specific accounting or reporting issues before being brought on board. This also means that even if Caro Holdings Inc. had discussions about accounting matters with BLC before officially hiring them, BLC didn't issue any reports or give any advice that the company considered a key factor in making its decisions about accounting or financial reporting. The same applies to any disagreements or reportable events that might have happened before BLC came on board. The filing concludes by listing any supporting documents. For this report, the key exhibit mentioned is Exhibit 16.1, and that's the letter from Olejinko Oyebola and Co. confirming or commenting on the company's statements. And then we have the signatures. This part simply confirms that the report has been officially signed off by someone duly authorized within Caro Holdings Inc. In this case, it's Marisha Reynolds who holds the title of president. The date of this signature is July 15, 2025. Now, let's put on our investor hats and look at what this all means. The most striking detail is that problematic explanatory paragraph from the previous accountants, O & Co., talking about substantial doubt concerning the company's ability to continue as a going concern. This is a critical signal that the company was facing serious financial headwinds, potentially struggling with cash flow, debt obligations, or overall profitability. When an accounting firm includes such a statement, it's like a flashing warning sign for investors, creditors, and anyone else dealing with the company. It means the auditors saw something that made them seriously question if the business could survive long enough to meet its financial commitments. This could be due to a variety of reasons, like mounting losses, inability to secure financing, or a significant operationist. The fact that Caro Holdings Inc. promptly switched accountants after this revelation is a common move for companies facing such scrutiny. Sometimes a change in auditors is an attempt to get a fresh perspective or to find an accountant firm that might be more optimistic or willing to work with the company. However, it's vital to remember that changing auditors doesn't magically fix underlying business problems. The new auditors BLC will have to conduct their own thorough review, and if the going concern issues persist, they'll likely have to express similar concerns in their own reports. The statement that there were no disagreements with the former auditor on accounting principles or practices is a bit of a mixed blessing. On one hand, it suggests the accounting itself wasn't the primary point of contention. On the other hand, it might imply that the fundamental financial health of the company was the root of the concern rather than any complex accounting judgments. The lack of pre-engagement consultations with the new auditors BLC is also interesting. It means BLC wasn't involved in any strategic accounting decisions before being hired. This could mean Caro Holdings Inc. wanted a completely clean slate, or that the issues at hand weren't seen as accounting complexities by management directly. Looking at the overall situation for Caro Holdings Inc., the priority for any investor right now would be to scrutinize the company's financial health and business model very closely. The going concern warning from their previous auditors is a major red flag that demands attention. The company needs to demonstrate a clear path to financial stability to that warning. The appointment of new auditors is a step, but the real test will be in the future financial reports and the company's actual operational performance. Without seeing their actual financial statements, this report only tells us about a management and auditor change, but that change itself is driven by something significant that potential investors must investigate. So what's the verdict? Caro Holdings Inc. is making significant changes in its accounting oversight driven by serious financial concerns, previously flagged by its auditors. While the change in auditors might signal a new approach, it doesn't erase the past warnings about the company's ability to continue operating. Investors should tread cautiously and focus on future disclosures and the company's ability to prove its financial resilience. The key takeaway is the going concern doubt, which is a strong indicator of underlying business struggles that need to be addressed head on. Alright, that's our breakdown of Caro Holdings Inc.'s auditor take on these numbers and what they signal for the company's future. Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.